This lesson started with a look at excess and umbrella liability policies, which are a great way to increase the level of protection for liability concerns. There are some differences between excess liability and umbrella policies, so be sure to remember how they actually provide coverage. The coverage of underlying policies must meet certain minimum levels, and if the underlying policy fails to maintain those minimums or is canceled, the excess or umbrella policy will no longer extend coverage. These contracts are available for both personal lines and business needs, and it's important for a client to have the correct amount of coverage based on their exposures. We then moved into professional liability concerns. You know that a commercial general liability policy won't cover professional exposures and losses. For example, a CGL won't provide coverage for an insurance agent that's negligent in performing their professional duties. That's what a professional liability contract is for. Professional liability policies are meant to protect specific occupations and their related insurance liability exposures. Many clients in these occupations will seek your advice on these products. You can't assume a customer knows about professional liability coverage or whether they need it. This is where your knowledge and expertise will be critical to assist your client in finding the correct protection. There are numerous conditions and exclusions attached to these contracts. If you understand what is not covered by the policy, it becomes much easier to recommend the proper endorsements or additions to coverage that will take care of the customer's needs. We next took a look at surety and bonding issues and defined the parties to a surety contract and their roles. Make sure to spend some time on this topic. It will be on your test. Remember, there are contract bonds, which are primarily intended for construction and related industries, and commercial surety bonds, which can be written on other types of bonding needs such as court needs and license and permit bonds. We then moved into flood insurance. In order to sell flood coverage, you must complete an approved flood insurance training course. In most states, this is a one-time 3-hour course requirement. Flood insurance is an important consideration for any property owner living in an area with even the slightest chance for flooding. Like any other policy, the greater the chance for loss, the higher the premiums. Make sure to study how the different maps provided by FEMA and the National Flood Insurance Program differentiate between things like the 3 different risk categories. We also discussed a community's involvement in flood coverage. Remember, a community has to create a flood plan that meets certain requirements. When they begin their initial phase of planning, they can obtain emergency plan coverage at that time. Once the community completes their flood plan, the amount of coverage under flood insurance increases substantially. Make sure to study the amount of coverage available under both the emergency and regular flood programs. Then we concentrated on other policies and coverages seen in the marketplace. We discussed boat and watercraft insurance and the different types of coverage they provide. The lesson looked at how these items may be covered, and they're remarkably similar to automobile insurance with bodily injury and property damage coverage, medical payments, provisions, and physical damage protection for the watercraft and accessories. Accessories like depth finders, seat cushions, rod holders, water skis, and similar items are covered under the boat equipment portion of a policy if the coverage was added to the contract. These policies can also be endorsed to protect personal items too. Then we looked at the unique protection of difference in conditions policies. Intended to plug the holes in base policies, DIC insurance may provide coverage not offered by underlying contracts. Although there is no prohibition for use in personal lines, they're more often purchased by commercial entities. Finally, we looked at recreational vehicles, which generally cannot be insured through an automobile insurance policy. RVs don't meet the definition of automobiles in a car insurance policy, so they have their own form of insurance coverage.